Eric, can you hear me, buddy?
I can hear you.
All right, man. Get your
I know.
there you go.
I got it.
Awesome. All right, we're gonna give it a few minutes here. I'm gonna unmute Tom as well.
Okay.
Hey, what's up, guys?
How you doing, Lee?
Good. How about you?
Awesome, man. Awesome.
I want
We
to
get a few more people in here. You know, we usually have a handful of agents that are looking to make more money on here, but right now it looks like just 2 or 3 of us. We'll see what's up. Yogi is in he's in Kansas City.
I like the cool background you have there.
Oh, thank you very much.
You've got all the tricks.
Yeah. Unfortunately, I can't figure out how to remove that right now. I'm kind of stuck. I've been stuck with it for a few weeks or months. It seems to get a lot of positive reviews. So here we go. A few more. All right. Rob is here he's in the San Antonio market.
Howdy, everybody.
How you doing?
All right.
What's happening?
Rob, good to have you, buddy.
Thanks.
We'll give it another 2-3 minutes here, Eric. I know you're busy, but I want to
No,
make sure
you're good.
there's many ears and eyes on you as possible.
You're good.
Hey, there's Tom.
Hey, Steve, how you just? Are you working from home? Or are you going in the office, or what are you doing?
I'm in the office. I'm in the office right now.
Have you been going in every day?
I have, yeah.
Is it a ghost town in there?
You know, it's yeah, it is. It's pretty.
Yeah.
There's probably about 75% less cars in the parking lot out here. I'm in a pretty big building, and yeah, there's not many people in the building whatsoever.
Yeah.
I've survived a do-it-yourself haircut.
Hey, my wife gave me a haircut. I may save myself like 30, 40 bucks a month. I was actually quite impressed.
Mine too. So I'm thinking the same thing.
Yeah, opens up a whole new. Now I don't have to worry about making appointments and all that crap.
Just don't show nobody the back, right?
I know exactly. Yeah, it looks good on camera. That's it. There is a rough spot over here. You can't see it straight on.
Yeah, I was looking at all my suits in the closet. I haven't had to, I've been saving on dry cleaning. That's one positive.
Yeah, I know. I was gonna throw on a suit just for the call, and I figured like, what the heck? I might as well just go with what I'm wearing every day.
Not many suits these days.
Who's going to the office? I mean, Steve, are you even going to your office?
I am. Yep, every day. I'm in here right now. I promise you, I'm in my office, even though I have the background.
Yeah. He's probably sitting in his car right now in a parking lot.
As far as you know, I'm in my office. Yeah.
Those McDonald's drive-thrus are open.
Yeah, exactly. Yeah.
All right, so I'm going to go ahead and I'm going to mute everybody except myself, Jesse, and Eric, and Tom. Jesse's going to mute, I guess. All right, so thanks, guys, for everyone showing up today that's here on the call. We are recording this, by the way, Eric and Tom, and I appreciate you guys making it out today. Just for a quick reference, Eric is with Guaranteed Rate. Tom is with Guaranteed Rate. They work together in Downers Grove, but as everybody here knows, Guaranteed Rate, you can do mortgages all across the country, correct?
That is correct.
Okay. And Eric is an integral part of what we do here. I'm going to mute some people. I'm going to mute everyone except myself and Eric, and then I'll mute myself. Eric does a lot for my team, and he's, anytime I need a loan done and I know that I don't have to worry about it getting done correctly, I send it to Eric. And he's done a lot of things. He's very in tune with the mortgage market, what's going on right now. He's going to talk about the current climate of what's going on in the mortgage industry, and I think a little bit about what to look for moving forward. So Eric, I'm not going to talk very much more about that. I'm going to let you do the talking, and why don't you take it away for us?
And I can share my screen at some point too, right? Because I got some slides I wanted to show real quick. Okay. So, so really what I've been trying to do is just do as many kind of reach out and touch base with as many agents as I can. And, you know, I had reached out to Steve, and Steve thought it'd be a good idea to jump on the call. So I appreciate the opportunity. You know, I really look at, you know, talking to a lot of agents, there's a lot of panic, there's a lot of concern. And I truly, truly believe 100% that this market is going to present a lot of opportunities for the professional agent. And what I mean is that for the last 2 years, you know, you could, you know, have any agent list your house, the house would sell immediately. You could, you know, you could have anybody help you find a house, and you know, it was easy to do. There was no value to having a professional agent. The professional agent is going to become very, very integral in any buyer or seller's plan to buy or sell a house. And that's going to be more evident now than it has been probably since just after 2008. There's going to be a lot of agents that get out of the business. There already, if you haven't already seen, I'm sure you have, there's been a lot of, even already, you know, people transferring offices, and we've already started to see a lot of that. So I just wanted to go through, you know, some of the things that I've been working on and what I've seen other agents working on that's been real successful. And just, you know, what I keep saying is that mindset is so important right now. I know Steve is really big on this, but, you know, you got to have a very strong mindset, and how you view things is going to be how you know, are able to succeed in a market like this. And again, I truly believe that housing is going to be a big part of this recovery. We went into the, you know, everything with very strong, I mean, we were all expecting one of the best spring markets that we, you know, and then all of this happened. And you know, the fundamentals have really not changed. Has unemployment going to be higher? Yes. But the government is pumping trillions and trillions of dollars into the economy. You know, we learned a lot in 2008. And what happened in 2008 was the government kind of just, you know, wanted everything to kind of just work itself out in a way. And that obviously did not work out. They're not going to let a bunch of houses go into foreclosure, because as we know, you know, that ended up hurting a lot more people anyway. So, you know, let me just kind of run through a couple topics. I'm willing to answer any, you know, questions along the way. You know, as far as rates, you know, Steve knows I don't like talking about rates, but rates have been a hot topic. You know, rates have been anywhere between 3.125 at a 30-year fixed all the way to, you know, mid to high fours over the last 3 weeks. It's been a really, really wild ride, okay? At the end of the day, we're gonna have low rates for a really long time. All these trillions of dollars that are going into the economy are really gonna prevent rates from moving up anytime soon. I mean, I'm talking years and years of rates probably. We may never see a rate, you know, in our lifetimes above 5%. Okay, so, you know, from a rate standpoint, that's going to be very supportive of the market. So the other thing that you got to be really, really aware of is that, you know, choose your vendors wisely. It's really, really important nowadays. There are a lot of lenders right now that are struggling either to capacity because they have too many refinances and they're not able to handle the volume, to, you know, raising credit scores. One of the things that's happened over the last 3-4 months is, I'm sorry, 3-4 weeks, is the government is allowing people to you know, do a forbearance on their mortgage. It's causing complete havoc from an investor standpoint, because if we take in a loan and then someone closes on a loan, then all of a sudden they can skip 3 payments. Who wants to buy that loan? Because that servicer, even though you're skipping 3, 6, 9 months of payments, that servicer still has to make those payments. Okay. So I don't know if you know, but, you know, Quicken services a large amount of their loans, okay? They actually have already hinted that they may need help from the government, because if 40 or 50% of the people say, hey, I want to skip 3-4 months worth of payments, that Quicken has to pay those, the underlying investor, those missed payments. So all the changes that you have seen to FHA minimum credit scores, programs going away, all the things that's kind of disrupted the market over the last two weeks are really, in a way, related to this forbearance issue. Because when the government did it, they never really kind of thought through the process of, yes, you can skip payments, but what happens after that? By definition, our forbearance, you skip 3 payments, but let's say you make the 4th payment, you now have to make all the 3 previous payments at once, okay? So let's say you skip 3 payments, and now you're asking someone to make 4 payments at day 120, and they can't make the payments. Well, now you're talking about a modification, okay? And are the servicers going to report that as a late payment? Are you going to be penalized when you try to buy a year from now, okay? And the dangerous thing is you're going to get a lot of questions from your database on, you know, should I skip my payments? I really want to skip my payments. Be very, very careful to provide advice on this. The best advice to give them is to contact their servicer. The best thing you can be doing over the next 30, 60, 90 days is reaching out to as many of your past customers as you can and start having these conversations. What you're going to find is they're going to have a lot of questions about forbearance, which you're going to want to encourage them. And I can send you some documents as a follow-up. But you also want to caution them to make sure, because I have financial advisors advising clients of mine to skip the payment when they're both employed. It's absolutely crazy. And the impact of that down the line is going to be huge. I mean, you know, nobody knows what that impact is going to be. So again, so those are the kind of things that are going on in the industry. But I think the most important thing is refer them back to their servicer to get the information. They'll send out a document that kind of outlines everything that they're going to be responsible for. Be very, very careful to provide any advice one way or the other. There's going to be, you know, class action lawsuits. Attorneys are already looking at this stuff and waiting for people to provide bad advice. We've been warned already that you got to be very, very careful providing any type of advice to any of your customers. You just want to encourage them to contact their servicer. Okay. So that's kind of where things are now. As far as, you know, the opportunity in this is, you know, think about all the technology that is coming into, you know, what's being pushed forward. You know, we're doing virtual appraiser. So, you know, appraiser can go out to the house, never enter the house. Customer can take the pictures of interior photos. You know, we can do everything virtually. Okay. So, you know, that's going to create, you know, so think about it, the life cycle of a buyer or a seller. You have to handle the objections of the concerns that they have. And when you're reaching out to your customers, there's a large amount of people that are freaking out about what's going on, and they're solely not going to list their house or purchase a house just out of fear. But if you can lay out the series of steps that you could take as an agent, you know, you could do a virtual listing presentation. You can do, you know, they can leave the house and you can do your virtual tour and have that online. You can, you know, we can do virtual appraisals, you know, all the different things that you can do technology standpoint. You almost want to be able to present that and have a different way of talking through that, because there's going to be people that have to buy and people that have to sell. And you want to be able to, I think the agents that can present it in a way of how you know, how technology is going to help you do that and ease those concerns, the better off you're going to be. And the more people you're going to be able to kind of get over that hump. Because a lot of people are just like, they just can't wrap their head around it because they're thinking about the way that they used to do it. But now you got to kind of think about and shift. And I think this is a great way to get new clients, is to be able to kind of discuss all the things that you're doing and the success stories that you've had doing it virtually. I know as a company, you know, we're doing virtual closings where, you know, you close in front of a camera like this in front of a title agent from their house. That in itself has gotten me so many leads that, you know, it's just because people are like, okay, yeah, I want to do that. So you want to take that technology and not just use it, but you want to promote it as what you're doing to kind of address, you know, people are going to gravitate towards this technology now more than ever. But if you continue to do business exactly the same way you did 60 days ago, it's not going to work, because people want, you know, that comfort in that. So that's where I would say, some other things that have come up that I would be very, very careful of is condos. You know, most of these HOAs are not staffing people, okay? And it's hard to get, you know, condo questionnaires. It's hard to get paid assessment letters. You know, they may have one person that calls you back 3 days later, and if you don't get what you need, you're delayed another 3 days. So if you're listing a condo, you're gonna really wanna lean on the homeowner a little bit more than you probably have in the past, and make sure that the attorney is more involved. We're really struggling to get anything to do with an HOA. It's been a challenge. So the other thing are recording offices. So we do a lot of e-recording. You know, there's a lot of lenders that don't allow for e-recording. So essentially what e-recording is that, you know, if we do a virtual closing, there's certain documents that need to be wet signed. We are allowing the title agent to have a limited power of attorney to sign those, and then they're e-recording them. A lot of lenders don't allow that. and they can't do an e-closing, so you have to do a drive-through. So these are all things that you want to be aware of and talk about with your attorney. What are your options for closing? What is your strategy? Can we do a drive-through closing? You know, you want to get all that in the area, because again, you want this to be kind of a part of your menu of services. But you keep in mind that when you have another lender, this is where, again, choose your vendors wisely. They're going to have different guidelines. And if it's an out-of-state lender, who knows what they're going to require. So this is where you really got to kind of manage the transactions a little bit differently than the way that we would do it in the past. The other thing is, you can send a notary to the house. So let's say someone, you know, I had an elderly couple that wouldn't do the e-close. You can send the notary on a purchase to the house. She can lay the documents on the porch. People can come out, grab the documents, sign everything, okay? Lay it back onto the porch, notary comes back, picks it up, and they can just do it with again, no human contact. So again, work with, so if you got an elderly couple and they say, you know what, we got to move, you know, because we're sick, but we're really concerned about the market. Again, these are the objections that you're going to start to get. And these are the ways that you can start working through those to try to get more business. But, you know, those are the things. The only other thing I would say that I would be very, very careful with is that I've seen a ton that's made me cringe, is kind of the social media posting. So you got to be really mindful of the market that we're in. Okay. You know, again, there's a large percentage of people that are just taking this really, really, they're scared, they're afraid to do anything. Or maybe they got a family member that's sick. So there's a lot of stress around that. You know, be very careful what you put about facts and opinions. You know, you only want to post things that are factually correct. Don't give any type of opinions. I see a lot of people posting. I would also be very careful, you know, the post about, oh, everything's fine, the market's great, you know, because these people may have just lost their job and you're basically saying everything's fine. So you gotta be very, very mindful of what you're posting out there and how that's going to be viewed elsewhere. I think it's very easy for someone to kind of ruin their you know, what they've built as a business without being mindful of kind of the stress that everyone's under. So I'd be very, you know, kind of what I would not try to, like when you're calling people, it's not like you're trying to sell anything. You're not trying to convince them to do anything. You really just have to be almost like just checking in to see how they're doing. Can I help you with anything? You know, when I'm talking to a lot of people, they just have questions about basic stuff. Like, hey, I'm really worried about, we were thinking about selling our house in a few months. Like, what are you thinking? Like, just kind of just help them through that. But I'm not saying, oh, you should really do it now. Rates are low. Like, you want to be careful about, you know, trying to sell anything. You want to be looked at, you're just kind of checking in with them to make sure they're doing okay. And I think that's really, really important. The only other thing I would say is timelines. Be very careful when you're writing contracts, taking a listing. Keep in mind, you know, you don't want to submit 2 or 3 week contracts. Can it be done? Yes. But, you know, some lenders are struggling to close in 60, 90 days, let alone 30. And, you know, we have to do extra verification of employment. We have to get different paycheck stubs. There's so many things that are being thrown at us with everything going on that I just think it's a good idea to limit the amount of back and forth with extensions, you know, because you know how it is. A customer gets a move. As soon as you give them a date, they're going out and getting movers, transferring utilities, and it moves one day and it throws them into a tailspin. So give yourself a little bit of room there. It'll make it easier to manage the transactions. The last thing I'll say about this is just, you know, make sure you digitize your business as much as, you know, as much as possible. So, you know, digital open houses, BombBomb, Zoom, you know, you can text videos, you can text open houses, you know, you can do through KV Core. If you use your CRM, you can do squeeze pages with a lot of video tours. There's just a ton of ideas that you can do from a video standpoint that are getting a ton of views on Facebook right now. Facebook activity is up 60% over the last 3 weeks. So take advantage of that, be mindful of it, and use it to your advantage. Let me share my screen. I just wanted to kind of show you the one question that I've been getting the most, and the one kind of, you know, everyone's saying, oh, it's going to be 2008 again. It's all over again. This is going to happen. And, you know, I don't know if you guys follow Steve Harney at all, but if you don't, I highly recommend it. Keeping Current Matters. I'll send you the information. He's been posting a ton of great stuff regarding this almost
Could
on
you-
a daily basis.
Excuse me, Eric. Yeah,
Yep.
could you send that to me? I
Yep.
was given that by somebody else and the video did not work. Could you
Yep.
definitely email it to me? What's he saying? I mean, what's
I'm
his-
gonna pull up the slides and go through some of it right now, but
Nice,
I'll
okay.
send you. Yeah, it's been excellent. So so give me 1 second here. Let's see here. Give me 1 second. Okay, so let me know when you guys can see that. Can you see that? Okay, so there's a few of these slides that I would pay very close attention. These are great social media posts or sharing with a customer who calls and is worried, about, so if you look at annual price appreciation going into 2000 to 2005, so prior to the housing, leading up to the housing crash versus the last 6 years, I mean, we were 6, 8, 12, 11% going into, when things started to kind of get out of hand in 2006, 2007, and 2008. Over the last 6 years, you can see 4%, 5%, 6%. And these are national averages, much more sustainable when you're at a 4 to 5% appreciation rate versus where we were. So if you remember, the biggest thing that people were doing is home values were going up. People were cashing out that value, and they were using it on who knows what, nothing, worthwhile. So it's a big difference. The next thing, in 2007, we had an average of 8.2 months of inventory. Okay. Today, going into, so this is back in March, we only had 3.1. So think about how, limited inventory's been over the last, 6 months, a year. I mean, it's been probably over a year. Completely different. So it's basic supply and demand. So if you take everything off the table, we still are in need of a lot of inventory. Whereas before in 2007, we had, inventory was slowly rising going into 2008. Whereas now, we still had a large shortage of homes going into. So again, a very different, market. This is probably one of the more telling differences as well, which touches on value. Total home equity cashed out. If you look in 2005 to 2007, there was $824 billion that people did cash out refinances for and took out of their homes, either in home equity lines, cash out refinances, and they were, everyone was using their house as a piggy bank and living lifestyles that they probably shouldn't have. Over the last 3 years, we've only had 232 billion. Okay, I don't know this stat exactly, but I think it's like 30 or 40% of all homes don't even have a mortgage in the United States right now, and that's one of the higher stats. And I will say, from my standpoint, 90% of the refinances we're doing less than a 30-year term. So we're doing 25, 20, 15-year term. People's idea of their house and what they're trying to do is completely different today than what it was prior to 2008. So therefore, when you have to sell a house, and let's say they have a job issue or they have an issue, they're going to have equity in there to be able to sell. Whereas previously, what did we have? We had values come down, and then they had no equity because they were cashing out and maximizing, the mortgage as high as they could. So again, this is percent of median income needed to purchase a median price. So this is just affordability. So even in mid 80s to year 2000, you needed 21% of your income to buy a house. 2006, it got up to 25, and today we're at 14%. I will tell you, next month, that stat will probably go into the 11, 12% range with rates in the low 3s. So what that means is your affordability today, okay, is far greater than any other time in our history, okay? Where again, and prior to 2008, prices were going up, rates started to go up, we had more inventory, it was a buyer's market, and it was just affordability really, definitely suffered towards the end there. So again, a much different environment. If you look at, this is the other thing is, during, when from 2007 to 2009, if you look at annual home price depreciation, stock market or S&P was down 51%, okay, in those 2 years. And you can see year over year how much, you know, home prices went down. They were going down, but nowhere near as bad as what, you know, the stock market was doing. And again, during the dot-com, as bad as it was, home prices actually went up. So, you know, we're going to have a recession. And I think, you know, the most important thing to remember is this slide. And this is probably the most important slide that you would want to share with as many people as possible is, you know, out of the last 5 recessions, only 2 of them saw a decrease in home prices. Okay. In 1980, 1981, and 2001, during the dot-com issues, home prices actually went up during that time. So a recession doesn't necessarily mean that home prices will go down. Okay. And that's very, very important for people, because the thought process is people are going to say, oh, well, I'm going to wait because prices are going to get a little bit better. I'm going to wait 6 months, you know, if I'm a buyer. If I'm a seller, you know, oh, well, I don't know what I want to do. I'm not going to be able to find what I want. You know, there's a large, you know, percentage chance that home prices could actually increase, okay, because of low inventory. Remember, supply and demand. If there's no inventory, we still have a lot of buyers. People still need to purchase homes, whether their rents up, you know. And think about this: with rates going down, the difference between rent and a mortgage payment is going to be even more exaggerated now, and we're going to have a lot more opportunity to show people that it's much cheaper to purchase. So again, there's some huge opportunity out there, you know, kind of sharing this. So this is where this market's going to create a lot of opportunity, because 30-40% of realtors and 30-40% of lenders are going to go around, mope around how crappy the market is and miss the opportunity to get this information out. And I think it's really, really important. So the only other thing I wanted to show you real quick, which I think is something that I put together, and I'll send this out to you as well, is, you know, as a listing agent, to manage transactions, you're going to want to, you know, when you get an offer and you talk to a lender, you're going to want to manage this a little bit differently than you did in the past. And you're going to want to find out more about the lender. There's a lot of information here. I put together more than you probably need, but I would definitely reach out to any offer that you get and ask them, if not all of them, some of these questions, because I'm getting more calls today than I've ever have about deals blowing up. Okay. And, you know, as a listing agent, again, this is the difference of having a professional agent. And I would show, when you go on a listing presentation, hey, this is what I'm doing. I'm calling these lenders. I'm getting this information. And if for some reason they can't do it, I'll send it to my preferred lender and they'll be able to do it, because this is the way that they work. And these are the things that we look for. Everything in here is something that I would pay very close attention to. If you have questions individually, more than happy to answer why I'm asking these questions or why this is in here. You know, something as simple as, when will you lock the rate? Believe it or not, there are lenders that are waiting to lock the rate until they have a full loan approval and they're getting ready for closing. So imagine if you take a deal in, rates go up 0.5 of a point, and now the customer doesn't qualify because the lender didn't want to lock in the rate. You know, there's a lot of things that lenders did in the past where they would do rapid rescores and do all these things. Those are all gone. You know, the agencies are not allowing that right now. So you really need the same way you need a professional agent, you need a professional lender to be able, you know, to keep track of the transaction, manage it, and update you along the way, because the last thing you're going to want to do is take the home off the market and then have to put it back on the market and have people go through, you know, that's not what you want in this market. And a lot of the situations that I see on the listing side are avoidable. And a lot of these questions are easily gonna, you know, if you have 3 offers and you call and one of them doesn't know the answer to these questions, that's your first indication that there's most likely an issue. And so I'll send this out to everyone as well, as just some, you know, additional information to share. But does anyone have any questions on, I know I kind of ran through a lot quickly. I just didn't want to take up too much of your time.
Does anybody have any questions? If they want to put it in the chat, or yeah, if they want to put it in the chat. Can you see the chat there, Eric?
Yep. Yeah, I'll get the slides out to everybody. Absolutely. We'll get that out to everybody. I'll forward it to Steve and Steve can send it out.
Eric, I can't thank you enough on how educational and informative this has been. I've seen a few of those slides, and I didn't know they were keeping current matters. They were from Harney, so I appreciate that. It was good to get an explanation on a few of those, and I saw a few that I haven't seen posted yet. So, any other questions for Eric? This is a really good time to ask any questions about any mortgage questions.
So I do.
Go ahead.
You said there's extra steps in verifying employment. Can you
Yep.
can you expound on that a little bit?
Yeah, so a lot of what they're worried about now is people that are furloughed and things like that. So we get, typically we get an initial verification of employment, okay? But now we're having to do that just before closing. We actually have to ask, are there limited hours? Are you, basically just if there's any impact to their pay based on what's going on, okay? And we're having a lot of issues that come on. Most of the deals that I'm getting sent to me from elsewhere have employment issues where, they're working every other week instead of weekly, all different kinds of stuff. So you really want to try to ask the question, on your listing presentation, and ask even a buyer, kind of, what are you doing for a living? And, you can do it without seeming intrusive, but the last thing you want to do is spend, 3 weekends with someone and go on and listen, get up their house ready, spend all the time, and all of a sudden, they're not working and now everything's on hold. So again, I think it's, so there's just going to be a lot of layers in there. And I will say this too, self-employed borrowers, some investors and some lenders are actually taking the income and subtracting 25%. Because if you're self-employed, I mean, think about it. I mean, that's stale data from last year, what they made, depending on what they're, so a lot of self-employed borrowers are going to have some issues with calculations just because, you're going to have to show a year-to-date P&L that you're still on track, or you have some way of verifying it, because a lot of that data just doesn't even matter. I mean, it's kind of like if you made a business plan as a realtor, as a lender, and then this happened, you basically have to rip everything up and start all over again because everything is different. And it's pretty much the same with a tax return. I mean, whatever you were doing before really doesn't matter. So those are the types of things that are going to create some challenges. I think these are all temporary. I really don't expect this to be long-term. I think everyone's just trying to kind of, as much as agencies are out there saying, hey, we're going to work with the consumer, and they're doing press conferences and saying, hey, we're going to help you out. Behind the scenes with us, they're not accepting any of it. They want to see full employment, so keep in mind, there's always that push-pull of, we got to look good to everybody else, but at the end of the day, we don't want loans defaulting. So, it's just, if you have good partners and people that you work with, this will become less of an issue for you. If you're dependent on a lot of different vendors and things like that, you're going to have some challenges. So this is where you got to kind of pick the right team together so you can go list and sell, and then that all these questions are kind of being taken care of.
Thanks, Eric. And one question came from Yogi in Kansas City. He works with a lot of investors. He invests himself, and
Yep.
He's asking if you would suggest investors to wait, or what's your suggestion there as far as anybody across the board, like if flippers or multifamily investors. I did see a report from CRBE or whatever the company is regarding the multifamily market. And they expect things to be, better here towards the end of 2020 for the multifamily industry. There's going to be some hiccups for a while, but they expect things to be good towards the end of the year. So I would say not wait.
I would say the only thing on investment stuff is, from a financing standpoint, the rates kind of suck, to be completely blunt. And that's just because, again, people that are going to take care of forbearance typically aren't going to do it on their primary residence. They're going to do it on an investment property. So, and a lot of people own multiple properties, and, there's in the bill and, the government bill, there is, assistance for people who don't want to pay rent, but really no assistance for the landlord to recover payments. So that's why pricing sucks a little bit. But to me, like, if I'm an investor, like, I talk to investors all the time. I don't see anybody's strategy really changing at all. And what I mean is that when everyone else is kind of scared and doesn't want to buy, a lot of times that can be a good opportunity. And maybe, they're able to get an offer in today that would be accepted that they wouldn't be able to get 2-3 months ago, because there'd be 4 offers over list price, owner occupied, so for me, like, I don't think this changes an investment buyer's, if they're ready, willing, and able to buy and trust the market and can get a good renter, why would you not want to jump on it now? So for me, I think you got to be careful stepping back in this market, because if you take the last 3 months of homes that aren't going to be sold, think of all, if you were to replace 50% of those in July, let's say, and then you have your normal business, we're going to have a lot of pent up demand. You have a lot of leases that are ending. You got school. There's going to be a ton of business, and no investor is going to be able to go in and offer 5-10 grand under list price then. You'd want to take care of that now. So for me, I would say I would encourage them to be all over that now. And maybe this is a good opportunity to reach out to anybody who you've sold an investment property to over the last 5 years and check in with them and say, hey, this is a good opportunity. I got these homes, and start sending them, automated listings at certain properties. Again, this is where this market will create opportunities. You just have to have the mindset to be able to be positive and look for those opportunities.
Great advice, Eric. I've been thinking along the same lines there. There seems to be some good deals coming across my desk because of exactly what you said. There's a little fear right now, and some people are just going to unload properties. So, any other questions before we let Eric go? I know he's got a closing that he needs to take care of for me here next hour. So I want to make sure he's all right.
I forgot about that one. I don't know. Is it? Hey,
I know you didn't.
Yeah. No, he reminds me every hour about it, so we're good.
Oh, I'm sure he does. Oh boy. Well, have fun with that, Eric. Anybody else have any questions?
Thank you, guys.
Thank you.
Thanks a million.
Very good.
Thank you. Appreciate it. I'll send out these slides, and Steve, you can forward them out.
Okay. Thanks a lot, Eric, again.
Thank you.
And I really appreciate your time today. Have a great afternoon. All right, guys.
Yes, thank you very much.
Guys, we're going to end the call right now. And if anybody has any questions about coaching items, give me a holler, shoot me a text, email, and I'll be happy to help. I'm available this afternoon. Eric's going to take care of that closing for me, so we're all good. Thanks a lot.